Welcome, everyone.
Cutting me off here.
I'm taking over Kyle's show. I'm going to do the intro, and then we'll let Kyle run the show. So,
all right.
Welcome back, everyone, to episode 92. It's been a wild and crazy week. We've had special edition last week. We did 2 podcasts, and this week, oh my goodness, it gets even better. We have one of the OGs of the company, Chad Roesler, Executive Vice President, I think is your latest title, right?
That is correct.
You've been here since the beginning, so we'll get into some of the fun stuff about you and kind of the history you've seen. But how's it going so far?
It's great to be here. Appreciate you guys having me on as a guest, and looking forward to it.
Yeah, this will be a fun segment. So we'll keep it a little lighter on the investment side. Your bailiwick and background is safe green, so we'll definitely delve into that a little bit and kind of give the listener something to think about.
I guess Lisa didn't get the email. You were told to wear green today.
Oh, yeah, I forgot to do the guest introductions. Besides, I got so excited about Chad.
Thank you, Keith. Now I'm the outsider here.
Lisa's here, Kyle, myself, and the special guest.
Mm-hmm.
Go ahead, Kyle.
Yeah. All right. Well, we are on episode 92 already. I can't believe it. It's a little bit of an asterisk. So for people listening and watching who did not circle up with our special Belsky edition last week, go back and take a listen. That was a good one. So we will kick it off with the standard 2 truths and a lie. I was going to go with something else, but then I was watching the Super Bowl over the weekend. I was like, I saw the reels and the memes and all the stuff coming out about crypto. So I was like, I gotta do that.
Oh, right. So, in Mr. Green's background.
Yeah. So I'm not a deep crypto nerd or anything like that. So this might be a little tricky unless you guys are in the weeds. So we'll give it a go. Coinbase.
Tell Chad the rules first before we start. Yeah.
No cheating. That's obvious.
Okay.
He hasn't done that. I know not yet.
There are 2 of these 3 items. 2 are true and 1 is false. And your goal is to find the false one.
Okay. Very good.
So Coinbase holds some of its cryptocurrency assets in offline cold storage for security. B, crypto ETFs allow investors to directly own the underlying coins. C, Bitcoin's supply is capped at 21 million coins, making it inherently deflationary. We're going to go ahead and start with Lisa.
Wow. Because giving Chad a break.
I see the
sweat.
I saw sweat and fear.
He's not the only one.
So I can see I heard that before, that this is some of that is kept in cold storage, so it cannot be hacked, or it said that it cannot be hacked anyways. But anyways, it's more safer that way. So I've heard that. I don't know if Coinbase does it, but I heard it from other companies, so that makes sense. Crypto ETFs allow investors to directly own the underlying coins. No, because then they would go and buy it directly. You own the shares of the ETF, and the ETF is backed by the coin. But the investor,
if you want technical, I think Chad and I are getting lost.
Well, if you want to piggy bank, it's like the investor owns the shares backed by the physical, but not the physical coin itself. And Bitcoin supply is capped at 21 million. That is correct. So I would say B is the false statement.
Oh, wow.
Seems kind of full of her.
Well, no matter what answer I give, it's going to look like I just dovetailed here.
Yeah, it doesn't matter. That's how we roll in here.
So what's funny is I'm 53, and crypto I find to be a little more than I'm probably interested in. I don't own any crypto. I'm a tangible, it has to be a thing for me to invest in it, but I follow it a little bit because I think it's fascinating. So B's the answer, in my opinion, on that. It'd be just like any other ETF where you don't own the individual stocks. But again, I look like I'm dovetailing there, but I had that answer before.
Wow.
There we go.
That's a solid answer. I was actually a little bit, stumped, not quite. So I'm going to have to follow you two and just say, Chad's got, actually, I'm a couple years older than you, Chad, just so you know, but in crypto, you're probably more knowledgeable in crypto than I am. So that's kudos
I
to
don't
you.
know about that.
All right. I'm going to follow the lead and take B as well. Kyle, what
you guys are all on. I should have made it a little harder.
Yeah, nice work, team.
I thought the
usually you're pretty sneaky.
I know. We had a special guest here, so I didn't want to go crazy. So
Chad, what he usually does, he uses the help of AI, like all of us, to kind of get at it. And then it's like, oh no, this is actually way too easy. And then he gives the prompt make it but evil. So his whole
That's the
AI
actual
chatbot is
prompt
just
use.
evil.
Yeah.
Just spits out the
Yes,
evil
do this
stuff.
but evil.
Yeah, this was a little
That's
easier
usually
than
how it
normal.
goes. Yeah,
Mhm,
yeah.
mhm.
That's
Chad, I kind of reference you're one of the OGs. Can you give us a little walkthrough history of kind of how the company started? You're there from the beginning and where we are now, and kind of what's been
Sure.
fun and exciting, and kind of a little history.
Yeah, so had the pleasure of working with Chuck and Tammy at a practice company, and then in 2005 we broke away and started Gradient, which at the time was called independent brokerage. All that we did was annuities, and that's what we knew, and so we kept it fairly simple. We were in an old converted mechanics garage, and it just kind of figured it out as we went. Like, we didn't know exactly how we wanted to do things. We didn't know exactly what it was going to look like, but we just knew if we were going to do this and stay in the space, that we wanted to do it for ourselves. And so it's been a heck of a journey over the years with, you look at, I think one of the things that Chuck told me in the beginning, he's like, hey, we're going to go and there'll be a handful of us. So we'll keep it small and we'll make a little money and it'll be fun and all this other stuff. Well, anybody that knows Chuck, like, that's for sure his elevator pitch, but not really what's going to happen. So if you look at Gradient, it's just been incredible to see over the last 20 plus years, whether that's investments or securities or advisory business or Medicare or life insurance. Like, I never would have thought 20 years ago that we would have basically an internal media studio where we're doing TV and radio and podcasting and graphic design, like all this crazy stuff. And so it's been an interesting ride to see how everything's gone. And I look back on the beginning, and the funny thing is, you don't know when you're in the good old days until you're out of the good old days. So in the beginning, when we were in the garage and, we didn't really have any money or didn't know what we were going to do, it was so much fun. But I didn't realize it at the time, because you're always worried about, okay, just keep going and it'll get better and it'll get better. And someday it'll get bigger and better. Well, then it gets bigger and better. And you look back and you're like, that was probably as fun as it was. Like, back in the day, just making our own decisions on the fly. And it was a really fun time, but you just don't know it when you're in the middle of it.
Yeah, we can all relate to the same thing through our careers, I think, too. At the beginning, it's such a grind, and especially for you starting a newer company, it's like, when's the next paycheck? Who's the next client going to be? It's like, right? It's like, it's crazy. And I remember when investment started, it was like you get $1 million every couple weeks, maybe a month, and now we're bringing in a lot more than that, right?
Yeah. I think in the beginning we thought, we had all these great relationships and people would want to work with us. And so we would approach them and they'd say, yeah, I'm interested. Get back to me in 6 months. So they wanted to make sure we were going to be around too. And so it ended up being different than we thought it was going to be, but it's been wonderful over the years, and to just see the impact that Gradient as a whole has had on the advisors and our FSPs is tremendous. And so I'm incredibly proud of what Chuck and Tammy have built here, and I can't even fathom what the next 20 years looks like.
Yeah, we're off to a great start, and I think the next 20 is going to be better. Obviously, the growth rate's accelerating, so it's good to be part of. We haven't been here quite as long. Lisa's been here how many years?
I'm approaching 3
Nice.
next month. Yeah.
Kyle's on about a year now.
Yep. Coming around.
Getting closer to 8, so.
Nice.
Add them all up, and we're not still a little short of Chad.
And we're all the little grasshoppers compared to Chad here.
Good stuff. Kyle, what do we got on tap for the investment side of things?
Yeah, I feel like we'll keep it kind of topical. So the REM song, maybe this is dating me. It's the end of the world as we know it, and I feel fine. So last week, markets were pretty choppy. Concerns on AI disruption, software got gutted. So risk really intensified there. Anything data intensive at all was pretty beaten up. So a couple charts that stood out to me: the VIX, which is the volatility measure for the markets, really popped up. Usually kind of like plus 20 is like I'm fearful. And we saw it flirt with kind of 23, 24 last week during the rotation. There's a couple other measures that I wasn't as familiar with, but those really stood out as well. So the VXN is kind of a proxy for that, and then the BVIV, which is the Bitcoin vol, and that one, to me, in this chart just shows. So it's kind of normally around 15 to 20, and it spiked up to 55 almost last week.
Oof.
So you look at that and say, okay, clearly Bitcoin and crypto are risk-on assets, and when risk goes off, they they go off pretty rapidly. So continuing that, the other items that caught my eye were Goldman Sachs has a bunch of baskets, basically quality, momentum, growth, different baskets that investors can look at. And the vol here was really shocking. So the 1 week realized volatility of the Goldman Sachs flagship baskets is at plus 80 now, which normally it's in the 15 range on average. So it's 60 points higher than the S&P 500. 60 points higher. It was all-time highs. So with that kind of framing, how do we think about volatility going from here? Does it help us? Does it hurt us? Lisa, thinking about structured notes, volatility is obviously
Exactly.
a boon for us there in terms of pricing. How does everybody think about it?
So I think my volatility, when it spikes and the VIX spikes, is always like, oh my God, like what is going to happen? And that is usually a time of distress or in something in the market when investors are very fearful, right? It's the fear index, so to speak. That's what it's called. I think volatility inherently is nothing bad. It just depends on where you are in the market, right? How concentrated you are. If you're very concentrated, for example, all in the AI trade in that specific area, then you obviously got hit harder by that. If you're levered, for example, levered positions, you're hit harder by that. But if you're diversified, or even if you're looking to rotate into other areas of the market or trying to get an entry point that is maybe a little bit better, when you were waiting on the sidelines, volatility can be very healthy, very good to reset expectations, to give us opportunities. And Kyle, as you mentioned, for our structured notes, for example, it's actually pretty helpful when volatility is higher because the options are priced cheaper. And that gives us, because structured notes is also based on options, an option overlay in there, which gives us better terms then, right, for our clients. So generally speaking, I think it's not good or bad. It just depends on where you are invested, how you are invested, and what is your kind of overall risk perspective and overall allocation.
Yeah, stocks move a lot, so people get nervous. But one nice thing, volatility picks up. You mentioned structured notes, but Chad, annuities, green money, kind of your bailiwick, and you want to address that and kind of why it's good to have that kind of what we call green money, safe money, and kind of how that kind of offsets some of the volatility stuff we're just talking about.
Sure. A good long-term investor is diversified, not just within asset classes, but within, what type of funding that they have for their retirement. Safe money, whether that be index annuities, whether that be, cash accumulation life insurance, whether that be the buffered index strategies. Like, they're an important part as people get closer to retirement. We look at volatility, and I love volatility. I love to buy low and sell high. There's an old movie, Caddyshack, and Rodney Dangerfield says he's on the phone with his broker and he says, everybody's selling, then buy, buy, buy. Everybody's buying, then sell, sell, sell. So it creates opportunities if you have the time to be in the market. Binger's famous statement is it's not timing of the market, it's time in the market. And so I'll probably like volatility a little less in 10 years when I'm looking to maybe utilize some of that. But it's just a good reminder when you get volatility spikes like this and you see the market do kind of what it does, that you've got a portion of your money set aside that really isn't impacted by this. So again, it's a combination of safe money. It's a combination of yellow money. It's a combination of all of these things that get somebody in the perfect place to retire.
Yeah, well said. Yeah, because volatility on the stock side of things makes it interesting, right? Because there's different opportunities. Like Chad said, if there's maybe a stock you've been watching or an ETF you've been watching, then now it's maybe on sale, or gets dislocated for a short period of time. I think it's a buying opportunity, and he's absolutely right. And there's a place for all these different investments, kind of, especially for the clientele that we generally serve, are people in retirement, so they're looking for that level of safety, and you get it several different ways. And then on the opportunity, for the markets, you have inflation, other things. You do want to have some growth assets because over time, inflation's going up. That's going to eat away at your purchasing power. So staying in the market, if you have a long time horizon, it's been a fantastic. And again, I'm a little older than Chad, so hopefully in the next 8-10 years, the volatility dials down as well.
Yeah. Well, so on that note, kind of, I thought it might be fruitful to walk through some of the rotations. I was pretty surprised. I think like most other people, you look at capital light businesses, all that software sector just getting gutted. And it wasn't just them, it was media, education, business services, basically anything that was, pay by seat versus, kind of a data broker itself. But even those, those companies were caught in. So some of the biggest moves were software, alternative asset managers. So you think about like the KKRs, the Apollos, the Carlyles that are publicly traded, and mainly because they're the pointy end of the spear that are getting into the venture capital, the private equity that are, enabling this AI shift. Insurance, wealth manager platforms. Keith, you sent me an interesting note yesterday. Charles Schwab was down, I think 8-9%. And it was based off the back of the rise of the robo-advisor again. I feel like this is, we've seen this movie, we've done it
3.0, 4.0, whatever.
Whatever number we're on. So, you think about some of these rotations, you add that volatility, all of it's kind of part and parcel of the same story. Keith, are you seeing any opportunities with G33 and that growth kind of all cap, up and down that spectrum? It seems like there's a good opportunity now for stock picking, is there not?
Yeah, it's a great opportunity because of the volatility. You're separating winners from losers. And when instead of just having 7 names, the Meg 7 are the top 10 driving the overall stock market, the market's starting to broaden out. Now, there's been some names I think that, that we've owned and haven't owned, especially in the software space, that have been really sold off pretty aggressively because AI is eating the world. It used to be software is eating the world, right? And software is a recurring revenue base, good margins, multiples were high. Now all of a sudden AI is going to disrupt that model, and anybody it's seat based, basically end of the world's here and stocks are getting hammered. I think there's some of that's going to be true. I think there will be some definitely losers in that bunch, but I think there's some that AI, we said, 2 years ago, it's the reason that AI is, it's like software, basically. It's just a faster speed, and with NVIDIA chipset makes it more realistic. So I think there'll still be some names in there that I think are on sale right now. So I think there could be an opportunity.
Yeah.
Chad, you, I know you do a little investing. Is there anything in technology you like, or any other space that kind of maybe on sale? Like you said, you like to buy low and sell high.
So for my personal investing, like it's from a AI technology like NVIDIA. And so I bought NVIDIA a few years ago. And
applause, Lisa. Where's the applause button? You have one of those on there?
Oh, not working.
Okay,
No,
it's not
we
working.
can't
Okay, let's
touch
not
it.
touch
But
it.
I haven't bought any recently because it's touching all-time highs. I sold out of some of it when it hit 208. Like it just,
Nice.
one of the things when I buy stocks is I've always kind of got a ceiling where I'm going to take some of my gains.
Yeah.
And so when it hit 208 a couple of months ago, I got out of a portion of it, but still still in, and I'll just wait, and something will happen here in 26 and there'll be a buying opportunity, and I'll jump in and buy a little bit more.
You don't go triple leverage short or anything like that?
I don't triple leverage short. No,
Okay.
I'm a fairly conservative investor. I like I like companies that are dividend producing. I like companies that, I'll give you an example outside of AI, North Face. Okay, so everybody in Minnesota owns at least 4 North Face jackets, and not just Minnesota, but anywhere north of the Mason-Dixon line or whatever. So the parent company there's VFC. I find that intriguing. Like, I don't think North Face is going to go anywhere. Like, it's so incredibly popular, and yes, I know that they have other companies underneath them like Timberland and other things, but that's been a fun ride. I was buying VFC, back during kind of the pandemic at $8 or $10 a share, and it's done fairly well.
Where's it now, roughly?
It's 20, just over 20.
Nice.
Whoa, that's
the name I
another
haven't
applause
paid
here.
that close attention. That's
So
fantastic.
anyway,
Yeah.
I like little things like that, and again, I never put enough in that it's like an oh my gosh moment. Like I'm fairly spread out, but I do take the little wins as we get them.
Nice. I like that investor, actually taking profits. And
Yep.
that's a hard thing to do, right? Because it's
Yep.
fun
And
to
have
buy
your
that.
own, goal. Hey, this is kind of where I'm
Start
selling out,
trimming
and kind of being really disciplined and doing that. That's a huge advantage to have.
For sure.
Yeah.
Lisa, any opportunities, any place you're looking at with some of the implosion? Obviously, precious metals have had a huge run this year. I know people have been talking about it. You made a killer trade out of silver, top ticked it, I believe. Any opportunities on your end?
I mean, yeah, overall, when we see like software sell-off compared to other AI, and I mean, we're seeing that, and we're talking about that on prior episodes, that they do not move in unison anymore. So we see some dispersion, we see some, and then also like the sell-off that kind of, shows how nervous investors are with all the AI, all the CapEx. Now we're in the earnings season and we get new numbers and all of that. So there's a lot of nervousness, and the whole software thing was based on Anthropic coming out with a new model that makes maybe some software names obsolete and stuff. And I think overall, it seems, and you sent out that yesterday, investors are trigger happy at the moment because they're nervous, right? They are doing and then asking questions later. It's like, oh, was that really necessary? Was it too much of a reaction, right? That's usually how it happens. But I think overall there is some truth to it, right? When we think of that, we needed a software built for everything, a math-specific software, a fitness-specific software, fitness app or something. And when we look at these chatbots and language models, either it's Claude or Gemini or ChatGPT, I mean, they can do a lot of that, just the chatbot itself, right? So we do not need specified things for each and everything and for a fitness app. And I mean, I can train the chatbot, or when it knows me after a couple of prompts, and tell them, hey, give me a new fitness regime every morning, give me, whatever. And it may not be all completely correct, but it keeps me accountable, and I can, train my chatbot that way. And I maybe do not need a special software for that. So
maybe it's training you.
Maybe that, yeah. Not that I'm using a fitness regime at the moment.
Oh, come on now,
that was
Lisa.
just an example. But you know what I mean? That's we don't need something specified for everything, because these language models can do so much just as they exist right now, and they are getting even more sophisticated. So I think there is some truth to it that this can be disruptive. So they have to step up their game, and we had like an interesting guest yesterday in the office.
Yeah, I was going to bring up that. Throw out that number.
Yeah, which is Gene Munster. He is very deep into the whole AI landscape. He runs an ETF that we are invested in with the Digital Discovery, which is Loop. And he has very strong insights there, right? And he also thinks, okay, that's disruptive, but he still thinks we're in a, what is it called, second or second?
Yeah, he said.
inning
Yeah, he said we're
Bottom
third
of
or
the third.
fourth, and I think
Yeah.
he went backwards in the baseball analogy.
Yeah.
So.
He did.
Yeah, which is interesting, right?
Yeah.
Because now kind of the general consensus is, okay, we are further along the line. Maybe we tamp down CapEx and then all of that spend. And he does not think so at all. Either or not it's true, I don't know, but
I think it's everybody's using it though, right?
Yeah.
That was in,
Yeah.
I mean, you're using
Yeah.
it. How about you,
Yeah.
Chad? Do you use AI a little bit on anything? Any work related, productivity, or anything? Just kind of your research on your golf swing or something?
I haven't to this point.
What? Nothing at all?
I haven't to this point.
You've never
used
prompted once yet?
I've never used like Chat GPT
Wow.
or
Really?
anything like that.
Today is the day.
Maybe
Yeah.
today
Hazing
is
after
the
this,
day.
boys.
And maybe it's that I haven't had a project that I've needed it to this
Mhm.
point. But I haven't. At some point, I'm sure that I will. Like the Chat GPT becomes a thing, and I just haven't. So I'm not opposed to AI. I think there's some great things. There's some things to be fearful of in that space as well. But I haven't to this point.
Yeah, I haven't. I'm a light user too. The only thing
Mhm.
I've done, like when we write our, different articles we
Right.
write, we used to have someone here that we'd write it and then it'd spend 2 hours just redlining everything. I was like, geez, this looks horrible. And then you get it back and just felt crushed. And now it's like, you all write it?
now
Throw it
AI
to
gives you the crush.
and just like, oh, this is way better than I even wrote it. It does a nice job of editing, and it takes literally a minute.
The
So
good
it's-
news is I don't write very well, so nobody ever asked me to write anything. So then I can kind of avoid the Chat
4D
GPT
chess
stuff.
over there.
That's right. I'm playing chess here, not
That
checkers.
was a good
boys.
move.
Yeah.
How about you, Kyle? You seen any opportunities out there? And
Yeah, I mean, there's definitely some interesting opportunities. I think that your comment earlier on the broadening out, we've talked a lot about that this year so far, whether it be people moving into precious metals out of fear, or moving into value from growth, moving from small to large, moving more into the junk versus quality. There's been a huge rotation all across the board. So, and then recently last week, moving from intangible to tangible. It's like people are worried about software or AI eating the world. And, what does that mean you loop back to? It seems like physical, real world assets, whether it be manufacturing, industrials, utilities, things that are like real that you can, hang your hat on. So, that's right in my wheelhouse in terms of what I manage here. G50 is a large cap value strategy. Contrarian Choice is kind of a clone of that. That's more concentrated. But yeah, so I mean, I feel like value has had a tremendous run. I think we'll continue to see that. I'm hoping, with the kind of overarching Fed policy being a little bit more accommodative, that will continue to help small and mid-cap companies, more value-oriented in nature anyway, more tangible. So I think for me, it's probably the best stock picking that there's been in quite a while, as you see correlations in the market kind of break down and less kind of zombied buying, just a horde of people just saying, I just want the Mag 7 and that's it. So I think it's a good opportunity going forward on that side. But
Yeah, it's good. I'm about to go back, and since Chad threw an idea of the VF Corp, I'm about to go do a little analysis and see what we got cooking there. Maybe we're missing something.
that one's had some volatility over the years.
Oh, yeah.
That is for certain. But yeah, interesting times for them because they also own Tommy Hilfiger, right? In that stack, I'm pretty sure they do.
I believe that's correct.
Yeah. Well, now you've got Formula One. You got Tommy as for the new Cadillac team.
Speaking of, are you Formula? Oh, you got to interview Danica. I mean, no, she's not Formula One per se, but she's a commentator.
Yeah, NASCAR, but adjacent because she's a commentator.
Yeah. Are
at
you
F1
a
events.
F1 guy?
I'm not. I'm not a race guy. No,
not a race.
I like
guy.
going to races because the people watching is tremendous.
Yeah.
If you've never been to a NASCAR race,
Oh, really?
like it is spectacular.
Lisa, me, you and I should go to one.
Oh,
But
yeah, we should go.
After like 6 laps, they just continue to turn left, and so then I'm kind of done with it. But like the people watching is wonderful.
Yeah.
Kyle's a big F1 guy.
F1's very different than NASCAR. It's it's not just the oval, but there's a lot of strategy to NASCAR and IndyCar relative to F1. But anyway, onto the fun stuff.
Yeah, let's get some fun stuff going.
So I'm not a big college basketball fan. I know KU beat Arizona though. Keith and I were talking about that. Are you a big fan?
So I went to the University of Kansas, and my wife and daughter and I still live in Lawrence. And I'm a huge fan.
You do? I didn't know that. Nice.
Yeah, I prefer college sports to pro sports. So even football, I prefer college football to the NFL. Prefer college basketball to the NBA, and KU historically has been a basketball school. I'm convinced that universities can be either good at football or good at basketball, but you can almost never be good at both. And so KU's historically been good at basketball. We've got an all-time talent there right now named Darren Peterson. He unfortunately has had some injuries. He's only played in about half the games. Well, he didn't play against Arizona. And so our best player didn't play, but it was an incredible game, an incredible atmosphere. One of the things that I ask of any athlete that I'm cheering for is give me all you got. And that's all I can ask. If you give me all you got, I can live with a win or a loss. And those kids just absolutely gave it everything they had. It was a spectacular win and a ton of fun. Makes for a long week though, when you're tipping at 8 p.m. on a Monday, and then you win and you've got adrenaline. Like it's a long night, but it was a great night.
Well, you know what you do with that? Then you go to the Kansas City barbecue joint, and then you put yourself in a meat coma afterwards.
Maybe 30 years ago when I was younger and thinner, I try not to eat 11 p.m. barbecue anymore.
So do you go to many? You do season ticket kind of guy? Do you go to most of the games if you can? I mean, you travel a little bit and you're a pretty busy guy.
So my wife and daughter and I are season ticket holders for KU football and KU volleyball. Basketball, I go to 2 or 3 games a year. There's so many home basketball games. There's 18 a year, and they're Mondays at 8, and you're fighting traffic. And as I've gotten older, I'm just lazy enough where I'm going to watch some of those on TV. So I go to 2 or 3 games a year. I know quite a few people that have basketball tickets, and it's fun to go for the atmosphere of it. But man, there's nothing that beats laying on your couch at 8:15 watching the first half.
100% agree. I used to love going to live sporting events, but it's so much easier. Especially I live a ways from the metro area, like an hour.
How do you know we're old? Because we prefer to watch live sporting events on our couch.
100%.
Well, I feel like with a lot of people now, anyway, they're half doing this on their phone. They're just doom scrolling while they're half watching. So
till the game gets better.
Until the game gets better,
and
right?
Keith will remember this too. 15 years ago, TVs were bulky and small, and the picture wasn't great. I mean, you get an 85-inch HD 4K, like you're damn near there.
Right.
Yeah.
Well, they're like $300 for them now. They give them away for free.
That's one thing that's actually price depression, right?
Right.
Versus look at a vehicle, how much that's gone up versus like electronics and TVs. It's kind of mind-boggling.
Right.
Just good. And they're lighter, right? They're not the heavy. Remember those old
Oh, yeah.
35-inch Sony TV is like 4 people to haul it in your house. Like, kidding me?
Yep. Do you watch? Are you a big sports fan?
No, not at all. Like I have like one story to racing, to Formula One, which is big in Europe, and obviously all of my male family members watched it on a Saturday or Sunday. So I have PTSD from my childhood from that.
Tyler and I sitting there chit chatting about it. She's just like,
because I've heard that same noise, the whole weekend as a child, and I was like, oh God. So not really. I mean, obviously a little bit of the ski jumping and downhill ski racing.
Oh, Olympics, right? Let's talk a little about
as
that.
As an Austrian, you obviously are a little bit. You have to do it. It's nearly culturally expected.
are you a good skier?
I would not describe myself as a good skier. I would not use that in one sentence. Right. Let's leave it with that.
You ski?
I skied in the past, yes. Obviously, as a good Austrian, I stood on skis before I could properly walk. So I was obviously very early.
Your parents had the little leaches as they were...
No. You just get on skis and...
and off they go. All right.
How about Olympics, Kyle? You got anything? We're kicked off now. And
I've been watching.
Anybody been watching?
I haven't watched a ton, but I definitely watched some of the downhill stuff. I don't know if Lindsey Vonn. I mean, she's a hometown here. She started at Highland and Buck Hill.
Buck Hill's like literally.
I didn't know that she was from Minnesota.
Oh yeah,
literally last week I was like, she's from Burnsville. I was like, what?
Yeah. So, but yeah, she that was fun to see her get back out there at the outside, and then disappointing and a little tragic, but it's amazing how fast they go, like 75 miles an hour down that hill.
Can we all agree that you have to be a little crazy to do most of the Winter Olympics?
Oh yeah.
You
definitely.
look at luge or downhill or the ski jumping or like
what about the guy?
The skeleton ones that are laying on their stomach, like face forward, and I was like, why would you do that to yourself?
Did you see the male figure skater who did the backflip?
Oh yeah,
and landed on the one blade. He was just, I guess they had it outlawed for like 50 years because of danger reasons, and then they just let them do it again. And
to Chad's point, you gotta be half crazy for the Winter Olympics. How about the video you showed me this morning, the downhill skier?
There was a Frenchman who was doing the slalom at high speed, probably 40 or 50 miles an hour, and he got whacked with the with one of the poles in his
one leg on each side of the pole.
Got it.
And you could hear him.
You could hear him. You could hear him.
So there's one sport that fascinates me, and it's the one where they do the cross country skiing and then they stop and shoot the gun. I always think to myself, 150 years ago that was probably how you lived. Like you just kind of skied around and shot a rabbit or something. I just love that continues to be a sport. It's just phenomenal.
Well, and the uphill, I didn't realize. I guess I don't watch Winter Olympics very frequently, but now I feel like probably with the phone and everything, it's always some more topical clips. But there's a guy, was a Norwegian or Swedish guy, who was doing an uphill Nordic skiing, not downhill. They were literally like climbing up the hill on skis.
It's too much work.
And he was doing a 6-minute mile climbing up the mountain on skis. Yeah. And I was like, what? So yeah, it's unbelievable. These super athletes.
Yeah, no. And I'm a big hockey fan. So I saw yesterday the women's hockey team, U.S. beat Canada 5-0. That's a big. I mean, those are the top two teams traditionally, but for the U.S. to beat 5, that's shout out to the women's hockey team. That's awesome.
So, all right. Well, with that, thanks for listening, and if you liked, give a like and subscribe. We'll see you next time.
Thanks for having me, everybody.
Thanks for joining us,
Thank
Chad.
you for joining.